Hey everyone, welcome back to my channel. If you are new here, please be informed that I share real and practical trading tips to help you become a better trader. And in today's video, we will discuss about a very important aspect in day trading. I would say this is not only limited to day trading, but of course is very much relevant in all kinds of trading. Okay, so the thing I'm pointing towards is called as corrections. So basically, a normal trader takes the correction thing just as a correction, but if you dig in more, there are much more things that needs to be looked at within that correction itself. Okay, so this is what exactly I'm going to cover in today's video. Okay, so in the stock market, a correction is a natural and unavoidable part of price movement. But for a day trader, if you are a day trader, the real skill lies not in spotting the correction, but in understanding whether the correction is a healthy or a non-healthy correction. Okay, because this distinction decides whether you should stay patient or look for continuation trades or protect your capital and step aside. Okay, so let's take it up one after the other. Let's talk about the healthy correction first. So basically, a healthy correction is essentially a pause or pullback within an existing trend where the market digests the recent moves without damaging the overall structure. Okay, what it means is that in an uptrend, the higher highs and higher lows remain intact, and in a downtrend, the lower highs and lower lows are respected. Now, during such healthy corrections, price usually moves slowly or sideways rather than falling sharply, indicating that the market is correcting through time instead of price. Okay, which is again a strong sign of trend strength. Okay, now for a day trading, from the day trading perspective, this often appears as consolidation zones or maybe a flag or ranges where candlesticks overlap, right? Bodies are small or momentum temporarily cools off. One of the most reliable confirmation of a healthy correction is again the volume behavior. Volume typically dries up during the pullback, signaling that selling pressure is weak and that the move is largely driven by profit bookings rather than aggressive institutional selling. Okay, now this tells the day trader that smart money is not exiting the positions but is likely waiting for better prices to add more. Okay, which is why healthy corrections often lead to strong continuation moves once the consolidation is over. Okay, now candlestick behavior further supports this view, as healthy corrections usually show long low wicks in an uptrend, indicating rejections at lower prices and an absence of large or full bodied opposite candlestick. Okay, you can also make use of key intraday references like the technical indicators, like short term moving averages like the 9 EMA or the 20 EMA or even the pivot points, which tend to act as support or resistance during healthy corrections. And when price respects these levels, it gives the day traders a clear framework for low risk entries with defined stop losses. Okay, so this is where a day trader is able to make a profit for the day. This is where we end up in greens for the day. Okay, now this is the theoretical concept. Okay, let's move on to the charts and let me show you what exactly happens on the chart so that your understanding becomes more stronger. Okay, let me bring in the chart here, just a moment. All right, and also let me bring in the pencil, just a moment. Okay, so what you see on the chart right now is the Bharti Airtel script. Okay, and it is a 1 day time frame, and you see some orange and red lines and this area with yellow color. Okay, let me explain one after the other. So what's happening on the chart right now is that what we see on the chart right now is that Bharti Airtel is in an uptrend. Okay, why do we say that? It's because it is continuously making higher highs and higher lows, right? This is a high, 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 low. This is a high, 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 low, high, 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 low. And it continues all the way till here, a high, high, and a high, low. But what happens after that? After that, it starts falling. Okay, the red line that you see here. So basically, it's making low highs and low lows. Lower high again. And after this lower high, is it making a lower low here? No, it is not making a lower low here. Okay, rather, what's happening here is it is entering the consolidation zone. Okay, so after a big uptrend, it started falling, of course, and then it entered into a consolidation zone. And after that, let me take off the pencil just a moment. Yeah, so once it enters the consolidation zone, if you take the charts towards the right, it continues its uptrend, right? So what exactly I mean to say here is that you cannot treat this fall right from here to here. Okay, you cannot treat this fall as a trend change, or you cannot expect the stock prices to be falling all the way from here. Okay, so this is a perfect example of a healthy correction. Okay, so this correction, of course, it is a correction, but it is a healthy correction. And why is it a healthy correction? It's because it did not break the market structure. So the market structure was higher highs and higher lows. And the reason why I'm saying it is not breaking the market structure is because it failed to make lower lows and low highs, which I just explained before some time. Okay, so the market structure is intact. Initially, it went up, entered into a consolidation zone, and again started moving up, making higher highs and higher lows. Okay, so this is the chart explanation for what I call it as a healthy correction. I hope you're clear on this. Okay, quite simple, nothing complex. Okay, now moving on to the non-healthy correction. So in contrast, a non-healthy correction is a warning sign that the market may be transitioning from a trending phase into distribution or exhaustion or even reversals. And this type of correction is dangerous for a day trader who blindly try to buy or sell dips without confirmations. Okay, non-healthy corrections are characterized by a clear breakdown of market structure, such as a higher lows being violated in an uptrend or lower highs being taken out in a downtrend. Okay, which immediately signals that the trend is no longer behaving normally. Okay, there is something abnormal happening around here. Okay, volume again plays a critical role here as well, because in a non-healthy correction, volume expands against the prevailing trend, showing aggressive participation from the opposite side and suggesting that institutions may be exiting the positions or reversing their bias. Okay, also the price action during non-healthy corrections is typically sharp and emotional, with large wide range candles, fast moves, and little to no consolidations, indicating urgency and imbalance rather than controlled profit bookings. Okay, also let's to add to it, let's not forget about the volatility also increases during non-healthy corrections. Okay, making stop losses harder to manage and increasing the likelihood of whipsaws, which is exactly why discipline becomes more important than opportunity during such phases when it comes to day trading. Okay, now the biggest mistake day traders make is treating every pullback as a buying or selling opportunity. So don't do that. Okay, now one more thing I would like to tell here is that you might have observed me making use of a lot of technical terms. Okay, my apologies for that, but seriously, I don't have any alternative for those words. So if there is any word that you are not able to understand, please feel free to Google it around. I'm very sure you will find a very simple explanation of what that word actually means. Okay, and as I said, we really don't have any alternative for those words, because those words are the exact words that are being used by every trader in the trading world. Okay, so to summarize today's video, please be noted that ultimately the market always gives clues about its intentions. Okay, and by learning to differentiate between a healthy correction that refreshes a trend and a non-healthy correction that warns of danger, day traders can significantly improve consistency, avoiding unnecessary losses and trade with clarity. Okay, the core principle to remember is simple but powerful. Trade what the market is showing you through the technical analysis and what is being exactly shown to you on the charts, not what you expect or hope it will do. Okay, because successful day trading is not about predicting moves. Okay, but it is about responding correctly to the information already present on the charts. Yeah. So I hope today's video would add in some worth to your cognizance about day trading. And this is what I wanted to share with you for today. And if you found this helpful, smash that like button, share this with your trading friends, and drop a comment below if you have any queries. Let's help each other grow as traders. And of course, if you haven't yet, please do subscribe to the channel for more real and practical trading insights. Thank you for watching. Trade simple, trade smart, and I will see you in the next video. Until then, happy trading and take care of yourselves. Bye bye.